You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's cooking in the world of futures options? Well, let's find out together, shall we? Let's step into the kitchen. That is TWIFO, as I put on my chef's apron and hat. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are mainlining these days. Hopefully, if you're subscribed to the network, you're enjoying the latest addition to the network, the Futures Rundown. Now a month old, already a month under our belts over there on the Futures Rundown, breaking down all kinds of fun, gold, crude oil, everything else, solely from the futures perspective. You folks have asked us for years, folks behind the scenes in the industry have asked us for years to go to the futures dark side. I resisted for as long as I could, listeners, but now we have gone there. And we're having a good time. Hopefully you're having a good time too. If you're just listening to TWIFO, make sure, yet another good reason to upgrade to the full network wherever you're listening to this, and that'll get you access to the Futures Rundown along with everything else that we do, nearly a dozen shows. Then, of course, if you're one of the hardcores, you're one of the super extreme folks, shall we say, then there's only one place for you, theoptionsinsider.com/pro. Once you're there, that'll get you access to awesome pro Q&As, as well as options oddities, after vol views, early access to other content, live streams, all sorts of fun giveaways. Congratulations to Tyler, the winner of our September Pro Trading Crate, and a whole bunch more. Theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on the old CME Hot Seat this week, our Dan Palooza continues here on the network. Yesterday, we had Dan Collins and indeed Mr. Dan Passarelli. Today, the Dan trifecta continues, none other than our good friend, Mr. Dan Gramza from Gramza Capital Management. Mr. Dan, welcome back to the show, sir. I'm going to have to rename it the Dan Network.
Well, great to be with you, Mark. I'm looking forward to our exploration of the markets today.
Nothing but Dan's 24/7 on the Dan Network. What do you think, Dan? Are you down for that?
Sure, why not?
Why not? It'd be huge as we keep on rolling right on into the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show where we break down everything lighting it up to the light side and to the dark side over there at CME Group this week. And looking at the report for this week, listeners, it is biased to the red, even though the largest percentage movers are still to the green. I would say we're roughly 2/3 red and about 1/3 green on the overall chart this week, but clearly enough to make tops and bottom fives for each. Mr. Dan, as the Dan Network continues, you know how this is done by now, sir. So I will let you run with it. You can start wherever you like, sir. What are you feeling for the folks here on the light side and the dark side this week?
Well, I think we got to start with the light side. Interesting things. I feel the markets are very logical today. So let's start with that light side.
All right, sir. You want to run them down for our folks?
Sure. Number 5, energy sector up 7.58%. Nat gas up 7.59%. And remember, last week it was number 4 to the light side, up 5.47%. RBOB is up 7.71%. Number 2 to the dark side last week, minus 4.73%. Number 2, WTI crude up 8.78%. Number 1 to the dark side last week at being minus 5.26%. Number 1 to the light side, Brent FSO up 8.89%. That was number 3 to the dark side last week, minus 4.28%. So there's kind of a trend here
today.
I'm
getting a theme here with the light side.
Everything I talked about, right? It's energy, right,
getting
Mark?
a theme here to the light side, Dan. I don't know. It's kind of inescapable this week. It's been a while since we've seen all 5 of one direction are locked in one complex, sir, which is kind of interesting.
It is, but I really do feel today it's logical. And the fundamental drivers we see out here really push these markets as we're seeing them. And so it's fascinating to me. And like I say, I feel it's kind of logical. And there's some things that you would expect to move that really hasn't done that yet. So it's an interesting mix of markets today. Well, should we do the dark side?
Well, since we did one, it kind of feels incomplete to not do the other, sir.
This is true. Well, number 5 to the dark side, consumer discretionary sector down minus 2.3%. Material sector, number 4, minus 2.39%. Number 3, class 3 milk, minus 3.08%. Number 2, palladium, minus 4.63%. And if you remember last week, that was number 4 to the dark side at minus 4.15%. And number 1 to the dark side, minus 7.24% is Bitcoin. And that's also an interesting market in terms of the fundamentals that are swirling around it. So that's light side and the dark side.
Well done, sir. They're certainly coming for Bitcoin this week. But before we get to all that fun, listeners, let's break down the CVOL movers and shakers for the week, shall we? Remember, you can run this report for yourselves. Just type CME and CVOL into your browser of choice. That'll get you to the dashboard. Once you're there, set that high-low range to 1 week and go for the ordered list. And you, too, can play along with the home game. At the top of our ordered list this week, we have the energy CVOL, 56.13. I wonder why. Up 3 points just today, listeners, and also pinning the needle to the upside for their weekly range. The low came 48.67 last week. So energy vol, pinning the needles. Let's see what else we can find out here on the CVOL front, listeners. Commodities vol next, 35.39, up a full point today as well. That's another one that is pinning the needle to the upside. The low, 32.49. Coming last week. Below that, we have the ag products CVOL at a 20.39, up about a quarter of a point today. Also, pinning the needle for the week. The low came at 1953 last week. Now we get to the Treasury complex. Easy for me to say, the Treasury complex. The Treasury price vol will kick it off at 6.21, off a whopping 0.04 today. It's not a banger day today. On the week, they are still pinning the needle for the week, pretty much. 625 was from earlier this morning was pinning the needle, but they're pretty much still right up there. The low was 566 set last week. Below it, we have the FX CVOL 863, off 0.12 today. And that's another one that was at 874 this morning. That was the high for the week. The low, 7.87 last week. Below that, we have the metals CVOL 19.15, off 0.83 today. So they're coming for metals vol today. Also, pretty much at the low for the week. The high was 19.98 earlier this week. And then at the bottom of our list, we have the Treasury yield vol 116.06, off nearly a full point today, 0.93, and pretty close to the high for the week. The high was 116.99 that it hit earlier today, and the low was 105.58. All right, there's your CVOL for this week. But I think it's inescapable, listeners. It's not often on the show we have the entirety of the movers and shakers in one direction, dominated by one complex. So we need to start in energy first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, to the wild world of energy we go, listeners. Go into that cmegroup.com/TWIFO page. If you haven't done so before, they will ask you to make an account. It's free, takes 2 seconds, and you have access to everything CME does, so probably worth your while to do it. And then once you do that, you go into that drop down, go down 2 slots from agriculture to energy. And then we're going to kick things off in the big dog that's getting all the headlines these days, which is our old pal WTI. If you want to deep dive into the inner workings and some trading examples with WTI, check out the futures rundown from yesterday. But one of the big narratives that's been on the show and in the futures market for the last couple of weeks, we had Carly Garner on here talking about it. We had Kevin Green on it. Other people coming on talking about this, is this dance that's been going on in crude. And a lot of people were saying if we started really breaking below the mid 60s into the 65 and below, then it was probably look out below for WTI. But if we managed to rally, then maybe the worst would be behind us. And the latter is, of course, what happened. 73 1/3, up 5.14 points, or 7.5% just this week. If you go back to, of course, the end of our show last week, up nearly 9%, 8.75%. So it's been a banger week here for WTI. Of course, a lot of that lifted off of the 1-2 punch of the hurricane domestically, internationally, seeing a lot of tensions in the Middle East. So that's always a recipe for crude to take a bit of a sojourn to the upside. What's also going on out there, listeners, is a metric ton of volume out there. We haven't seen WTI this active in some time. You know, usually on a good week, 450,000 contracts. If things are pretty active, 500,000, 600, 650. If we're going wild, 750. It's very rare you see over 1 million, let alone 1.26 million contracts on the tape. But that's precisely what we're seeing out there in WTI this week. So clearly everyone and their mother and their mother's grandmother are out there trading crude oil this week. So Dan, I know you and I have been talking about this narrative in WTI and crude in general for a while as well. Seems like, at least for now, the narrative is to the upside. What are your thoughts on this move? Does this dispel the concerns people had about weakening crude demand? Is this kind of just a near-term aberration because of what we're seeing in the Middle East and the hurricane, and then maybe we might start turning down the other way? What are your thoughts on this size upside move we're seeing in WTI right now?
Well, I think you hit it right on the mark. And that is, we're seeing a market respond to that Middle East. This is not a supply-demand shortage kind of a driver. It's a uncertainty driver. When we look at the Middle East situation, where it's going to end and what's going to happen, there's so much up in the air that the market, if it's going to respond to that, it's going to go to the upside. You know, and I can't wait to hear what you have to share on the option side. I mean, we're looking at markets now where you think about hedging, and you think about the institutional side, the idea of 80 to 100 is not out of the question in that thought process if you're trying to put that kind of a hedge on, if you're trying to really protect maybe your current position in the marketplace. So what we're seeing here today, it's the way it's doing it, I think is impressive. The last 2 days, we've rallied up near $72 a barrel or above 72. But they sold into it. So what the action that we've seen for the last 2 days for crude is not bullish. It's more neutral. And it's a market that was saying, okay, what's going on in the Middle East? And what we see here is we see crude oil taking off today. And so far, it's clean. It's trading near its highs. That's what I mean by that. The next major level for that market is around 76.30. We'd want to see how it behaves there if it gets up there. And the way you'd want it, if it gets up there, what you want to see it for it is to cut right through it. That 78's looming out there, you'd want to see a clean move. So for the next 3 to 4 trading sessions, you'd want to be up there at 78, actually. The 76 I mentioned, that level you'd want to see within the next 2 trading sessions. So by Monday, you'd want to see that, depending again on what happens with that Middle East. And, no matter what happens, if they do continue with these attacks, if Israel does do something with Iran, if that happens, and let's say Iran goes offline, they cannot ship, well, globally, is that going to have an impact on supply? No, it's not. There's plenty of other supply that's available that can fill that void. So it's really an interesting situation also for the players in crude oil right now. They're talking about increasing production. When these guys cool off their production, they're giving up market share to do that. And some of them are getting a little antsy, it seems. So OPEC does want to see higher prices. And that $100, if you look at Saudi Arabia, that's the magic number that they want. Many players between 70 and 80, they're okay. And without this fundamental that we're talking about here of the Middle East, I would expect this market to trade in that $65 to $80 barrel range. That would be a logical movement for this market. But with this uncertainty, it's very interesting. And Mark, one more thing that I find interesting today too, the dollar is stronger. I mean, they're coming after the dollar with both hands because of this uncertainty. And we're talking about the Middle East. With that uncertainty and dollar going up, getting stronger, typically that weighs on crude oil because it trades in dollars. So we're not seeing that. We're seeing dollar stronger and we're seeing crude oil stronger. Something typically has to give here. So it'll be interesting to see what kind of legs we see in crude oil. And something too, this kind of movement we're talking about is not 3 weeks from now. It's really in the next 5 days. If this is going to light up that market, we should see it relatively soon. If we don't, then I think we're back to really that sideways range type market. So that's kind of how I see things happening here with crude.
Fascinating stuff out there. Kind of say, Dan, we were breaking down the contract specs for WTI yesterday. Crude is such a refreshing contract. It makes so much intuitive sense. It was at $70 a barrel roughly yesterday. It's for 1,000 barrels. The notional value, $70,000. Everyone can wrap their heads around it. The ticks are in penny increments. There's no funky, crazy ticks. Everyone can wrap their heads around WTI. I wish all futures we're as approachable for our audience, Dan, as W. I mean, the size is big. 1,000 contracts, 1,000 barrels is big. But wrapping your head around, I think most of our listeners can do that, Dan, which is not the case for every future we talk about there.
No, and Mark, that's a very good point. And there is some reason behind some of the what seems like goofy numbers that they use. One of them is industry standards. So if you look at sugar, it's $11.20 a tick. Well, what the heck? Because you can take 110,000 pounds of sugar in a railroad car. That's where the number comes from. So it's an industry standard in terms of size. Then they back in to the tick size. So it does create some confusion. But once you get it, it's not too bad. You just need to know it's not like stocks, that, or like crude, like you mentioned. It's logical. It's easy. So the other ones we have to sort through a bit.
Yeah, it's like future symbology. It's completely impenetrable when you first encounter it. You have to just kind of suck it up and memorize it and then go from there. So a lot of barriers to entry for a lot of new futures traders. But don't worry, we're walking you through them there on the futures rundown. Let's get to some of the options action that is going on out here this week. Like we said, a banger, an explosive week out here in WTI options. Well over 1 million, 1.25 million options on the tape. Been a while since we've seen that. And as you might expect, a lot of it seems biased to the upside. The majority, 37.4% going up in the November contract that has exactly 2 weeks to go. Let's check out there. What is the vol in November crude, you might be asking? 53.25. Up nearly 17 handles, 16.8 handles. So vol getting spicy out here in crude land. Skew-wise, let's see. Last week, we had quite the skew setup last week. The puts last week, 7.2% discounted, so nobody wanted the puts. I remember we were obviously lower last week, listeners, a little over 5 handles lower. And the calls, 12.7% bid. That turned out to be the right way to go because we have rallied hard. Now the puts are 5.4% bid, so maybe we're kind of hitting some of that equilibrium out there, and the call premium is gone. That is down to a 1.8% discount. So we have blown through all the strikes that everybody was buying leading into this. They have dumped them, and they're moving on probably to other things. We got the 75s pretty active in November, but they weren't actually the big dog this week, slightly outpacing them by about 2,700 contracts. We have to go out to December, 43 days, listeners, for the Dece 80s. Those are the big dog out here this week, doing 38,000 contracts this week. So pretty much weirdly symmetrical paper. 15,800 going up today against an OI of 30,000, and about 15,600 going up on Tuesday. Also opening there, so the lion's share Tuesday and today. 4,700 yesterday, slightly opening there. About 2,000 on Monday, slightly closing. So some folks getting the heck out of Dodge there. And then right behind it, we have the 75s in November, which first caught my eye. They went up about 32,000 times this week. So slightly behind them for number 2. My first inclination was maybe someone was taking off the near-dated 75s and rolling out to the 80s. But that doesn't appear to be the case because we have about 12,400 going up on Tuesday, mostly opening there, and then 10,700 on Wednesday. Again, slightly opening there. So we're opening throughout the week on the 75s, which is not what you normally see as you're rallying towards these strikes. Usually we have folks who have put on these positions and then they're getting the heck out of Dodge as we get to the strike. They're taking their profits. Maybe they're rolling to a higher strike or going farther out. But either way, that's not the case. 6,800 going up today against an OI of 13,000. So there's still some size OI open on these 75s here, listeners. So again, we're at a 73.32 right now. 75, not that far away. If all this tumult in the Middle East can keep up, you can easily get there in 2 weeks. And looks like some folks are wagering on just that, even though we did see the call wing collapse. So clearly there was some selling out there this week as well. Beyond that, we have the 80s also doing a lot of paper this week. 30,000 pretty much exactly. Now, interestingly enough, we were closing most of this week on the 80s. That's probably also where some of that call wing bid went away. So you don't normally see, as you're rallying, folks closing and then maybe rolling down to the 75s, but it looks like that's what we had. We had about 12,000 of the 80s going up on Wednesday, mostly closing, And then we had about 11,000 of the 75s going up that same day opening. And then we had about 10,600 of the 80s going up on Tuesday, mostly closing there, and about 12,400 going up of the 75s, also on Tuesday, mostly opening. So it has the whiff of a roll down, even though, again, that's not what you typically see. Usually you see it the other way, folks taking the 75s off, rolling up to the 80s to live to fight another day. Interesting stuff out there. Maybe we had some aggressive overwriters, and they're deciding to get the heck out of Dodge, even though the skew doesn't really look like that. So yeah, total of 30,000 on the week. Today, 7,200 going up against an OI of 14,400. So it's all upside so far. Dan, kind of a little bit head-scratching paper. Usually we see the folks rolling away from the strikes we're going towards, but this week seems like they're rolling down to it, sir. What do you think?
Yeah, I totally agree. It's not typical behavior. And especially, well, we'll see what happens, how we finish the week out, if that attitude changes, where we see more of a typical type behavior. Because the upside now on this market really has changed. But let's something that we should probably add in here, Mark, is that let's say the Middle East, and I hope God hears this, that it calms down and we don't have the continuation of all the craziness. And so the supply that's coming out of Iran continues to come. You know, if Israel does take out some of the refinery operations or something else that would affect that, that really is a game changer psychologically. Again, not the real fundamentals of global supply. There's a lot of supply out there. And you know something, too, with all this uncertainty that you and I have been talking about, don't you think it would bleed over into related markets like nat gas? Nat gas is not responding like we're seeing with crude, which really does make sense because the supply globally issues with nat gas really isn't going to be affected much by the Middle East conflict at this point. So it's not responding. So we're not seeing it, even though we had everybody to the light side today related to energy. One of the pieces that's really not there today is nat gas.
I'm looking here really quickly. If you're looking for a little bit of downside here, listeners, in WTI, you got to dig a little bit, but it is there. Out in November, we saw about 20,000 exactly of the 65 puts going up. The big day looks like it was Tuesday, almost half of that paper, 9,500 going up. Again, closing, so it seems like some folks are bailing on the 65 puts, which that's kind of typical paper. You're rallying away from the strikes. Some folks getting the heck out of Dodge. 5,500 on Wednesday. Also closing 3,400 today against an OI of about almost 13,000 left. So there still is some decent OI. Again, we were at 65 just a week ago, so we're close to it. So it isn't that far in the rearview mirror, and about 1,500 today. So there is some downside to be found, just not a ton. Well, we talked about WTI. You mentioned nat gas, not exactly explosive this week. Let's just touch on it really quickly, Dan, to emphasize that point. Nat gas right now, $2.96, up about 6 cents or about 2%. On the week, up nearly 8%. So a little bit better on the week. Volume-wise, though, you're right, Dan, not exactly participating. It's a decent week. It's slightly heavy, but not a banger. Usually we expect about 450,000 contracts on the tape. This week, slightly over 500,000, 508,000. So we're closing in on 3x the normal in WTI. Not quite there in nat gas, about 50,000 more than normal. And looks like the lion's share of that, about 55% going up in the NOV contract. This time has about 25 days to go. What is NOV vol in nat gas, you might be asking? It's a little bit shy of a 58, about 57.90, off about 1.1 points on the week. Skew-wise, not a heck of a lot going on. 1.3% discounted with the puts last week, 1.5% this week. The calls last week were where the action was. They were 2.5% bid. This week, they are nearly 4% bid. So calls ticking up a wee bit. Dan, you mentioned nat gas not really playing ball. What are your thoughts on that, sir? Why do you think that is?
One, we don't have any fundamental shortages for that. The demand has been fairly consistent. The concerns about the storms that we've had and that terrible devastation that we had recently with Helene, it didn't affect that part of the marketplace. Louisiana really didn't get hit. Louisiana is one of the important areas for nat gas. We have 3 of the 7 largest nat gas processors is in Louisiana. And then Texas City, when we'd want to look at Texas as the next major area for LNG production. So they take nat gas, squeeze it down under pressure, keep it very cold, and it goes from a gas to a liquid. And we're also seeing the shift in LNG shipments going to Europe and to China fairly consistent right now. And if you look at the European situation, we've adjusted in the energy marketplace. Remember, just a couple of years ago when Russia invaded Ukraine, Mark, you and I were talking about what it's going to happen for Germany. Germany doesn't even have a way to accept crude waterborne. And United States didn't really have approaches to send a lot of nat gas, LNG, internationally. Well, that's really all changed. So Russia, have they now stopped shipping nat gas? No, not at all. It's, India, China. So they're still sending nat gas. It's just going in a different direction. And Europe is somewhat gotten balanced. Norway, which provides 20% of nat gas to Europe, they're still there doing their thing, supplying that piece. We're seeing Spain import facilities really having the ability to bring in nat gas. Germany, they now have means to accept waterborne nat gas. So we've seen a shift in the marketplace, and it seemed to somewhat calming down. The magic $3, though, what's interesting is we hit it yesterday, we kissed it, we backed off from it, and today we're trying to approach it again. You mentioned that 296. So it's a very interesting market, and it's not running to the same beat of the drum that we're seeing with crude oil and everything you gave us there.
Speaking of interesting markets, it is number 1 to the dark side this week, and there have been some interesting developments out there. So I think we'll take a sojourn into crypto next.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, listeners, we don't get to stop into crypto too often here on this show. We touch on it every now and then. Of course, we have a full show about it every Monday called the Crypto Rundown on the network, which if you're intrigued, I encourage you to check out. And we do talk about the futures on occasion there. Right now, if you want to go find these listeners, pop out of energy, go up 1 slot to cryptocurrencies. Then you have your choice there of the big futures the big options on the futures, or indeed the micro options. And, it's an interesting week. Usually the problem with these is that we don't see a ton of paper on the tape, and that's actually not the case this week. We're seeing some decent paper, at least relative to the past here for Bitcoin options. Nearly 1,000 of the big Bitcoin options on the tape, about 800. That's nothing to sneeze at. Remember, that's a 5x contract, so you're talking a decent amount of Bitcoin changing hands there. Dropping down to the micro, which is a more bite size for you folks, nearly 3,000 of those going up this week, which is also very intriguing. But Dan, one thing that caught my eye this week, and I wanted to point out here as well, is that there have been some additions to the CME crypto complex since our last show, just since this week, where we saw CME adding to its Bitcoin futures lineup. They added Bitcoin Friday futures, which they're calling BFFs. I like that. And that they actually put up some numbers, Dan, about 32,000 of the Bitcoin Friday futures traded on day 1. So again, not explosive. It's not a 3-month SOFR or the E-mini S&P. But for a Bitcoin, it's actually pretty decent. It's actually the most successful cryptocurrency product launch they've ever had on day one, sir. So, Dan, I'm curious your thoughts on these new products and what we're seeing out here in Bitcoin land this week, sir.
Well, I think this new product, which I thought was really a brilliant idea, is because what it does is it broadens accessibility to this complex, to the Bitcoin crypto world. And we're also seeing marketplace that's interested. Like you mentioned, that those rollout numbers for a brand new contract, that's impressive. And it does say something about market acceptance of that product and the interest in Bitcoin and crypto in general. It's still there, even though this market has really been in a fairly large sideways move here over the last few months. But it's interesting, especially where we are right now. As I look at Bitcoin, we're at a possible transition point. We're seeing the numbers today on the list because of the last 3 days. It fell out of bed. But it's the way it's behaving today. It's stopping to catch its breath. It shows us a market that rallied yesterday. If you look at yesterday, we rallied, near that 62,700 area. But when we got there, they sold it off again. The day before, the way it made new lows, which is around 60,350 or so, 370, it bounced right back up on the close. Didn't give it an update, but it's that behavior. So what we've seen over the last 2 days is evidence that buyers are trying to come in. And they're coming in at a level that we've seen them before. And that's around that 61,000 range. Let's talk about today so far. Today it's very balanced. It's really calmed down. The last 3 days, boom, they're hitting it every day, driving it lower. Yesterday it cooled off a little bit, but today really calmed down. And it's the structure, if we finish this way, implies balance. So we've gone from imbalance to the sell side to balance. So the sellers right now, they're not in control anymore, at least not in today's action. So that would mean if indeed we start turning up, if on Friday we see this market trading towards that 62,000 and it gets sticky, it starts holding in that range, that could be a transition to a sideways to higher market. Now, if you and I would get on the long side, if we were a call buyer, if we did a bullish spread, then to me, the next 5 trading sessions are critical. They will tell us how to manage that position. If it's true that we're in transition and the market's going up, then at the end of 5 days, if that position, if it's not sticking above 62,000, then I would give it the big adios, because the probability is we're going to go sideways. That's what you'd see in that kind of environment. So we're not out of the woods in terms of further weakness, because who knows what really fundamentally drives this market. What we do know, we're at a level we found buyers before. We have a market that's been on the sell side that's slowing down. And if we do make that transition to a rally, then we should see it on the close on the week, which would be tomorrow. Are people willing to go home long this market? Or does it trade above 62,000 but close below it, where they say interesting, but we're just not ready yet? If that happens, Monday becomes critical. And if it doesn't rally on Monday, I look for a sideways to lower move for the following week. So it's a very interesting one, I think, price action wise. when we look at that market. And we're getting more and more choices to participate in the crypto market if it's of interest, right? We got ETFs now. And what's interesting about that is psychologically it becomes a stamp of approval, just like futures does being traded on an exchange. There's a unwritten stamp of approval that you can touch this market in a regulated environment. So if you have a dispute, well, you have a way to get that rectified. If you're in the cash side and you have a dispute, there's nobody to go to. We're here, we got that, I don't want to say safety net because this can go up or down, but you have a regulatory environment that I think is comforting to a lot of people. And as we expand the product mix from ETFs to futures, there's ARB that goes on between those. There's firms that I deal with, that's their business model. They trade between ETFs and futures, and this allows that to happen as well. So it's an interesting market, and it's evolving like the new product that you talked about, Mark.
It's funny, Dan. I was just thinking to myself, we haven't gotten a big adios yet on the show. And no sooner did I think that than you hit us with a big adios. So now we can all rest easy, listeners. I forgot about that. We have a big adios here, and it's in Bitcoin. By the way, Dan, it's like you're the paper whisperer or something here, because I was just looking at the flow while you were talking, and you said you might think about some verticals, something like that here. And that's exactly what we saw lighting up the tape out here this week in the big Bitcoin options. It was the 80,000, 100,000, so the 80,000 par, a Dees vertical going up 200 times this week, 150 times or so on Tuesday, 30 odd times on Wednesday, and about 20 times today. So they've been trading it slightly all week long, but that's still the biggest trade out there, and that's pretty much to account for the lion's share of the flow. So there we go, vertical action, just like Dan called for out there in all things crypto. Mr. Dan, we hit on the madness of crude oil and crude. Anything else catching your eye you want to talk about on the show this week, sir?
Well, the dollar is getting stronger across the board, which is interesting. And so far we have, well, wait a minute, should we talk about equity? Should we do
wherever you want to drive the bus, sir, I will take it. All right, to the world.
Yeah, let's look at some stock indices. We haven't talked about that.
Is something going on in stocks? I haven't been aware, sir. All right, to the world of equities we go.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, you probably know how to do this dance by now. Pop out of that crypto drop down. Then you're going to go 2 slots to equity indexes. And then from there, it's an embarrassment of riches. There's the E-mini S&P, there's the RUT, there's the Dow, there's the NASDAQ. It's a pick your poison on the equity options front. Mr. Dan, we're obviously in this topsy-turvy realm right now in the broad equity markets. We're flitting with new all-time highs, then we reverse intraday. We've been doing that pretty much all week. We've been doing that mostly since the Fed really hit us with that surprise half-a-point rate cut. The markets have kind of been in this whipsaw-y kind of mode ever since. What's been catching your eye out there in the equity world these days?
Well, I think the way it's setting itself up, part of it is for tomorrow. We have some more fundamentals coming out that can stimulate the market. What's interesting, if we look at shall we start with do you want to do the S&P or NASDAQ? Or,
you call, wherever you want to go.
Let's do NASDAQ. What the heck?
Let's mix it up. All right, listeners, to the NASDAQ we go. I will say it is a little easier analyzing the paper out there in NASDAQ. It isn't quite the tsunami of flow that we see out there in the E-mini S&P. Still an active contract, obviously, listeners. 168,000 contracts on the tape, but compare that to the north of 2 million we typically see in the E-mini S&P. It's a little bit easier to sink our teeth into what's actually going on out here. Also, we're not obscured by the, just shall we put it mildly, the legion of nonsense that is people picking up pennies in front of the steamroller out there in the S&P to the tune of hundreds of thousands of contracts. They can't stop selling garbage puts out there. So that obscures a lot of the flow out there as well. Coming into the start of the show, we have the NASDAQ shy of the 20K level by a sizable margin out here, listeners. NASDAQ 100. We're off about 1.25% this week, 19,962. Mr. Dan, sir, what is catching your eye out there in the tech-heavy NASDAQ this week?
Well, it's the behavior. I mean, you laid it out with what the Fed did in terms of 50 basis points, which I felt was not needed, by the way, and it surprised me they actually did do that. So we did have that variable out there. It's also something that's happening right now that can have such a tremendous impact, not only the Middle East uncertainty, but it's the strike that we have at the ports on the East Coast. You know, that's half of our import volume. 55% of our volume comes through these 36 ports that are at standstill. You know, we also export through there. 50% of our pork, 75% of poultry, 50% of our fruit and vegetables, they come through there. And I've heard some people say, well, okay, no biggie. Let's just send it to the West Coast. A couple challenges with that. It takes an extra week. You're going to have additional cost. We have drought conditions in Panama, so they have capacity issues of sending volume. And we have the West Coast. They can't handle more volume. And they have existing customers they're going to take care of first. So it's really an interesting variable when we think about that. I mean, some of the big box stores, they're not going to be hurt as much. But when you look at some of the medium to small companies, that can be lethal for them. They order goods about 12 weeks before a holiday. And if that stops and they can't get those goods, which means they have nothing to sell, which means you have people getting laid off. Excuse me. So it's really an interesting setup. And what I mean about the NASDAQ being interesting here, a few sessions ago, actually, back on September 19th, we had a very large day, which I call a benchmark candle. As we come back down towards that over the last 3 sessions, including today, every time we traded below 19,925, we got below it, it bounced right back up. Now, since that big day, we have traded below that level 4 times. Each time we bounce off of those lows. It breaks down to around 19,830 and we bounce right back up. So they're buying the break is what we're seeing in this market. And that usually is a clue for further movement to the upside. And yesterday, very bouncy. Today, very soft. And is it people just positioning for Friday? Is it the Middle East situation and the port situation that's causing problems for this? Probably yes, all of the above. So Friday really is going to be an interesting day, I think, in these equity markets. So in the NASDAQ market, what do we want to see ideally on a Friday? And that would be to close above 20,100. We close above that. That would be a sign of confidence going into the weekend. It could be short covering, or it could be that what we're seeing over the last 3 days is following through. We're seeing those buyers that is implied by the price action actually holding on as we go into the weekend. I think it's going to be true in the other indices as well, but I think it's kind of cleaner in the NASDAQ market in terms of that particular setup. So let's say we do close above that 20,100 on Friday. We see the sign of sellers taking profits and possibly buyers returning to the market. The next big objective for that market would be around 20,300. We want to close above that within the next 3 days. So that means by the close of Wednesday or Thursday, we'd want to be closing up there. If we are, then it implies a possibility of further movement. If we don't, it does go back to that big adios, and that is that we don't want to hold on a position that's we're not getting paid for. It's the way I feel about options and the underlying instruments. There's a certain patience level for certain types of trades. And in general, if we're looking at a technical reversal, which is what I would be looking at, then you want to get paid. In the next 5 trading sessions become important. So I think the NASDAQ has a very interesting setup here. And I can't wait to see what happens on Friday with that market. It's a little different than we're seeing in the other indices, by the way. They're still selling off. There's still downward pressure. And in the NASDAQ, we're seeing a little bit less. So I just think that we have a structure here that's worth watching.
Let's see what we're watching out here, Dan, for this week in the NASDAQ. And Dan, I might have gotten ahead of myself. I got all excited. I came out here and I pronounced, I love the NASDAQ because you don't see the rash of nonsense puts going up out here. And then no sooner did I say that, Dan, than we got a ton of nonsense puts to talk about out here, including the 18,700 puts. How do those sound? With 2 weeks to go, that would be quite the sell-off in the NASDAQ. About 1,200 handles, a little more than that out there in 2 weeks. Can we get there, Dan? I mean, anything's possible, but we saw 8,500 of those going up this week, mostly closing. Somebody was taking those off. They might have been rolling up 4,200 times to the 19,300 puts. Same day, all that going up on Tuesday, listener. So there's 12, almost 13,000 of our contracts right there. Mostly opening on the 19,300, so potentially they're rolling up. But just when I got excited, Dan, that we're not going to have to deal with the random noise that is these penny puts. Here we go. They're doing it in the NASDAQ as well. Let's roll up to some more relevant paper out there, shall we, listeners, in terms of action. And they're still pretty far out of the money. We got the number 3 really are the 19,500 puts. So 462 handles out of the money. Going away tomorrow. Those traded 3,100 times this week, all opening. So folks are still picking up those proverbial pennies and nickels out there. Beyond that, if you want to get a little bit closer to the money, these are still pretty far. 20,500 calls also expiring tomorrow. These were opening all week long as well, including 1,000 on Tuesday, 860 on Wednesday, so maybe they bailed on a bunch of them there. A couple hundred today, only 500 remaining, so they've been all over the place on these 20,500s as we've been kind of whipsawing along. And then 20,400s also doing about 1,000 contracts this week. Looks like, again, opening earlier in the week, closing later in the week, which kind of makes some sense as we were threatening maybe some of those levels earlier and now retreating off of those pretty aggressively out here. So yeah, unfortunately, it's kind of the same deal out here. We have a lot of nonsense obscuring the quality paper. I will say this: we've been talking about hedging in the broad equities a lot lately, and how things are getting a little bit more expensive. And that is pretty much the case in NASDAQ as well. We've mostly been focusing on the S&P, but NASDAQ's looking a little pricey. That said, it has come in a little bit. I'm looking at some of these put skews going out a couple of weeks to a couple of months. Let's say in 2 weeks, we were about 13% bid last week. Now we're about 11% bid. Going out to, let's say, about a month or two, you were 18% bid last week. Now we're 14% bid. So part of that is the skew action. We're breaking through strikes. So we're seeing some of those that put bid come in. People are taking them off because we are getting the downside move. But something to bear in mind, that is also borne out. I was just crunching some numbers for the 30-day skew in the E-mini NASDAQ. And that's hanging out right now. Well, the Qs, but it's analogous to the E-mini NASDAQ is hanging out at about the 87th percentile right now for a 30-day skew. So that's high, but also in the S&P right now, we're talking about the 99th percentile for 52-week skew. So puts are rich in the NASDAQ, perhaps not as crazy rich as they were even a week ago. So if that's something you're entertaining, you're a little bit skittish out there, then maybe that's an option for you. Again, not going to be super cheap, but a little bit cheaper than they were a week ago. I got a little bit of time left, and since we are talking about vol and the equity markets, let's get to a little bit of your futures options feedback, listeners.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your futures options feedback. Interesting, our flash poll just finished up for the last show. We were talking about that VIX upside vertical, and our audience ended up, over half of you wanted to sell it for 12 cents. That's kind of surprising, but it makes a certain amount of sense. I think the mechanics of that spread are maybe not the best, but you folks fading that, of course, if you're listening to the option block, you know what I'm talking about. Otherwise, we'll get into more detail on it tomorrow on vol views. But right now, Dan, our actual question of the week is, we asked our folks, the election is looming. I'm not sure if you're familiar, Dan, but there is an election coming up. We said, what is your trading plan through election day? And we gave you 4 choices. You said stay long, kind of stay the course, or you're going to get flat, go to cash, or maybe you're going to go the other way, you're going to get short and hedge kind of aggressively, or maybe it's going to keep things small and trade intraday through the election. Dan, what are your thoughts, and then where do you think our audience is lining up?
For me, steady as she goes. I really not planning on changing anything. It's if you look at the presidential election, what fascinates me about it, in some ways, it's more perception of what people think than the reality on a return basis. I mean, if you look at the average annual S&P performance, and this goes from 1933 to 2022. If you have a Democratic president and a divided Congress, you get the best return, 13.6. If you have a Republican president and you have a divided Congress, you get the best return, 13.7%. So if we look at an investment point of view, be as shocking as we feel. And it also depends on when you want this money that you're going to be trading. Is it something that you're going to be in and out of? Or is it something that you're talking about a portfolio that it's not today or the election, it's 5 years from now or 10 years from now? I think all that has an impact on how you want to respond to the election.
Stay in the course, says Mr. Dan out there, sir. Let's see what our audience has to say, Mr. Dan. Let's see if they agree with you. Let's see if you have your finger on the pulse of the people. And the answer is yes, Dan. 39.3% agree with you. They say they want to stay long / stay the course. No changes for them. 32.1% say they want to trade small, trade intraday only. 21.4% say you're going flat or you're getting to cash. And 7.1% saying you're getting short or hedging your portfolio. Get out there, listeners, at options right now and make your voice heard. All right, that music means we've come to the end. Man, Dan, we packed a lot of living into an hour. Did you have fun, sir?
Always, Mark, always. There's always something interesting going on in the markets. I'm never bored. There's always something someplace.
And if folks want to be not bored along with you, where should they go? What should they do?
Well, I have a website, I do a daily video to get a feel for how.
Looks like we're losing Mr. Dan there, listeners. But DanGramza.com is the place to go to check out everything. Trust me, if you like his nuggets here on the show, he goes into much more detail. You should be checking it out every day. Dan Gramza, GRAMZA.com, the place to go to kick the tires and light the fires. And while you're doing that, make sure you're heading on over to CME, CMEgroup.com/TWIFO. Set up that account, then you're off to the races. You can do the TWIFO, you can do the CVOL, you can do all the fun. Check out the Fed Watch. A lot of great stuff over there, but begin your journey on the TWIFO reports. You're going to thank me. That is going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern, to break down all of this vol we're having out here in the equity markets and a whole bunch more. Then we're back one final time for our pro folks, theoptionsinsider.com/pro, where we talk about what's going on in the world of unusual activity on options oddities. Then we're off for the weekend. I give my voice a rest until we're back again on Monday with the option block all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.